Wonderful. Jane, David, how are you? You're well?
Very well. Thank you.
Good. Good to see you as always.
Yeah. Thanks for having me.
Wonderful. Coming in, I think we're coming in, albeit we're probably only in a 30-kilometer radius from each other. We are zooming in from different locations, so still living the wonders of the COVID reality, coming in from everywhere.
The new digital world we live in.
That's it, mate. That's it.
That's right. Yeah. We're just waiting for others to join, and we'll start shortly.
Kick off. Awesome. A nice brief one today. I do like 30 minutes, pack it in, leave everyone with loads of information, and then just release them back to lunch. Much better than
in time for lunchtime.
Yeah, perfect timing. Perfect timing for lunch. Absolutely.
Yes.
Just something to build up the appetite, both for all things accounts receivable and recovery, and a meal. So that's the way we like it. That's what we like to do. See people filtering in.
Give it a minute, and then we should start.
Sure. Everyone grab your coffees, teas and coffees. Fuel up for not that you'll need the caffeine because we'll keep you on the edge of your seat, but just if that's what you'd like to have. Put your phones on mute. That's what I'm going to do. Otherwise, my phone classically takes over my headset, so I will make sure that's not the case for the next 30 minutes.
These days, it's the phone or the doorbell ringing as well.
Absolutely.
The dog barking in the background, or the child screaming from a bedroom.
I do have a coffee bean delivery coming in the next half an hour, so that one is important. If you see me ducking out, that's where I've gone, David. That's where I've gone to collect the beans.
Shall we get started then, Nick?
Beautiful. Let's do it. All right. So we will kick off. You have today 3 wonderful speakers, obviously talking about myself, but also the wonderful David and Jane joining us. So let's do a little bit of a quick introduction. I'm Nick Cooper, a CFO of ezyCollect, and I've been with this great business for 2 years now, and I've really enjoyed every part of it. But we are focused on accounts receivable automation and the collections of that, and it's we're here to make everyone's lives easier. So it's been a great journey with them, and we're going to enlighten you today with everything that you can do in terms of making that process simpler and easier. But across, Jane, over to you.
Thanks, Nick. Good morning and good afternoon to everyone joining us today. My name is Jane Evio. I'm CRO here at ezyCollect. I've been here for a number of years, and I can see some familiar names from some of our clients joining us today. So thank you for taking some time off from your busy day, and hopefully with this short webinar, we can help you with what's happening with the business, help you with some risk management tips and tricks. As we've also invited our partner from Recovery, David, over to you.
Morning, everybody, and thank you, Nick and Jane, for the invitation. I'm the sales director at Armour Group, and have been in the credit and collection industries for nearly 20 years now, so certainly showing my age. So looking forward to having a chat and hopefully providing some tips and some insights into the collections industry and how your customers can collect their cash and lose less, and
win,
get that money in the door and all. Exactly. Absolutely.
Awesome. So maybe just a few quick housekeeping things. This is a listen-in only webinar, but there is an opportunity to put in your questions throughout the process. So look out, there is a sort of a chat Q&A box, so feel free to pop those in there. Heads up, we are recording the session to make it available for those who can't join us today, but also if you want to be listening back, we'll be sharing that recording within sort of 24 hours once we finish. So that's a kind of heads up before we kick in. So without further ado, maybe we jump into the agenda.
Perfect. Yes. So because we only have 30 minutes now, less than that, we're going to look at a couple of things here for our agenda, looking at some of the pain points in a debt collection perspective. So in this, we'll start with from a CFO hat. So Nick will give some of his insights, but also share what our clients have been sharing with us. At the same time, we're going to share some success stories, right? Like how are other clients, perhaps in the same industry or the same business size as yours, are tackling these challenges that we're going to discuss. And as a bonus thing, we have also, obviously, being a technology company, we're always trying to look at things, how we can help you. So we're going to show you a little new feature, which is what we call Risk Portfolio. And finally, some key takeaways here at the end of the webinar. During the all throughout these agenda, please feel free to interact with us in the Q&A or in the chat box. But at the end, we'll spend some time on answering some of your questions. Yeah, so let's get started. Nick, over to you.
Cool. So look, this is, from an internal perspective, but it's very much just probably recapping the sentiments and the feelings that a lot of people who have joined us today have got, because a lot of you are sort of internal finance teams, but some of you might be owners of businesses. And so, it's really just, I guess putting onto a page everything you guys are feeling, because it is, these are pain points borne by everyone who has a business and has to chase and collect debt. So, the big three ones, we've got there, obviously cash flow management is the biggest headache of all. If you haven't got that money in the door, then you're really just kind of hampering your growth aspirations. You can't put that money in to inject and grow that new geography, build that new product, whatever it may be. And you're also putting at risk those relationships with suppliers. And at the end of the day, if you haven't got your collections in, and you can't be then paying out to your suppliers, and you really run a risk of putting yourself in a position where your suppliers are starting then chasing you for that, and it's just an awkward place and not a great place to be. We've all been there. Negotiating, it takes time and money, and that's kind of what the next one's about, which is resource allocation. We all know the amount of time, effort, and often this is out of hours for smaller businesses. The effort to chase is done. Because during the day you're running the business, you're dealing with customers, you're managing staff, your meetings. It's the effort on those smaller enterprises is the collections come after hours, and that's often when people aren't there, and so it's really hard. So it takes time, it takes money. If you've got a team doing this, people resource is not cheap. It's one of in many businesses, it's like one of the largest operating lines within their P&L. So there's got to be easier ways, cheaper ways to be able to kind of chase that, and there are. Obviously, that's what we're here to try and solve. But it's a really capital, from a money perspective, intensive process if you haven't really got it right. And then playing into that, there's the ongoing regulatory kind of environment, which as a business doesn't impact you so much and doesn't impact us so much, because obviously there are debts we can chase those within our realms, but obviously if we need to be aware of that wider landscape. So if we sort of do hand these off to partners of ours, there is with rules and regs that they must comply with, which obviously if you're being a good a good partner, a good business, you want to know exactly what your partners are up to and make sure they're operating within those. And it just helps to ensure that you've got a good ongoing relationship, because it's it shouldn't be seen as very much the end of the process. Hey, that debt's gone bad, I'm going to chuck it over the fence and never deal with them anymore. It's really one of those things that it should be just part of your BAU process. It's just, okay, if you need to get something in and there is some headaches and grinds about it, well, then you just very easily move that into your partner's realm. It gets collected. There's still a great ongoing relationship. Let them sort the process out of kind of collecting that if it becomes overdue. So, that's the big three. I mean, I really whistle stopped through those three items, but for me, those are my pain points every day. I mean, we do utilize our own software, so I do believe we've got a good process here internally. We don't have many debts going bad or major pain points, but from my past life, they were massive headaches. And so it's, they're the big ones, which I think a lot of businesses out there are currently experiencing. So it's, that's where we're at. But David, have you got some items out there? You deal with me, the likes
Yeah.
of me, a lot, all the
Yeah,
time.
look, certainly. Obviously, we've got, hundreds of clients across all different verticals, whether or not it's business to business, business to consumer, insurance, etc. And the sentiment is the same across all of those verticals. We're in a period of heightened, economic difficulties. It's certainly a tough time out there, and I'm of the opinion that credit and collections people become more valuable in this type of environment because, the importance of having good processes in place and staying on top of your debtors is increasingly important. What we're seeing across pretty much all industries, but probably, industries like construction, fast-moving consumer goods like, foods, hospitality, liquor, transport, etc. Significant increases in the number of insolvencies. So the requirement to act early and mitigate risk and get your money in the door before that customer goes bad is increasingly important. If I look broadly across the debt that's being referred to us in our capacity as a debt collection agency, we're certainly seeing increased volumes of debt across most sectors, and the average debt size has increased as well. So more risk, bigger dollar values at risk, which ultimately means to bigger bad debts if anything goes wrong. And you couple that with a really difficult labour market that we're in at the moment. So increasingly, we're getting told that it's near impossible to hire staff and hire good staff. So that importance of being able to pair your people with a really strong technology, something like what you guys provide is increasingly important in this sort of current climate.
Yeah, that's very interesting, David. I want to hear if our audience actually share the same sentiment. So we're going to put up a quick poll here on your screen just to see, what are the challenges from your end that you've experienced when it comes to debt recovery, right? So hopefully everyone can see this. Just quickly choose to see what you can see from the choices we have there. Otherwise, feel free to type in the chat box if it's not in the choices that we have there. But interestingly enough, David, when you say about finding resources, the people, is it just a competitive market, or it's just like what's the reason behind that?
I think it's a perfect storm of coming out of the back of heightened COVID period. We lost thousands and thousands of international workers. A lot of them have come back, but again, a lot of them are coming back more into the education sector in terms of students rather than skilled migrants. So there's certainly the shortage from that front. We've got a labour market that's increasingly driving wages up. So there's a lot of time. There's unrealistic wage expectations in certain industries. And I think it's also a generational thing. We've got a younger generation of people that, no one really plans to be a credit manager or a debt collector or a collections officer.
It's not a sexy job.
They tend to fall into those careers. You're right. And we're finding that increasingly the younger generation aren't interested. They're probably more concerned about being YouTubers and influencers. Maybe I'm showing my age a little bit here, but we certainly find that the difficulty in recruiting is certainly heightened, but then also retention as well. So if you're not offering flexible working environments to be able to work from home and benefits around education support and parental leave, etc., you're falling behind, and it's really competitive out there.
That's true. Yeah. Well, let's have a quick look at the poll that we just put up there so you can see the results, right? It's really the first one, like communication and resource constraints. I think we all have this, like reaching customers, ignoring, all those communications that you sent. And again, tying up to what we talk about, difficulty finding AR staff, right? So everyone's pretty much showing the same thing. Credit manager is a sexy job, Katrina. Yes. Absolutely agreeing that one.
We may be in the minority, so I was just trying. I agree, 100%. It is it's crucial, a critical job, 100%. Sorry, Jane.
It's-
Sorry, Jane. Keep going.
no, it's really good. Like, but I totally agree. I think like I mean, obviously from an ezyCollect perspective, like we have a very healthy cash flow in that because we have a great like CFO and the team, the finance team, works with us and keep us on our toes. So
We
this
have
is really important, right?
Yeah.
Yeah.
Yeah. I think I'd be interested to know in the results. Obviously, we had a clear winner around communication resource constraints, and there's sort of maybe two different things that's interesting. Maybe in another poll, not that we have time today, but just to kind of split that out. Is there a challenge? We've talked about the difficulty in resourcing. David gave great discussions around that, but also in communications, the battle to probably cut through all the other communications that people get is really hard. People are all, especially if a business is challenged within their current, cash flow, how do you become the one voice that gets paid amongst all the other voices that are probably chasing and shouting, and it's a really important part, I think, to sort of
I was going to
find out
say,
what works.
the environment's changed as well with people increasingly working from home and working from mobile phones. The ability to ring a company switch number like you used to be able to do and speak to reception and get transferred to accounts payable to get paid, that is decreasing significantly, right? So you've got to actually get to the individual within the organization that processes those payments. And if you're calling their mobile, we've got stats around 87% of people don't answer numbers from phone, don't answer calls from numbers they don't recognize. So if you're relying purely on phone to call someone and they don't know who you are, it's unlikely they're going to answer. So, the importance of communication across all channels is paramount to making sure you reach your goal of getting paid and getting in contact.
That is absolutely true. Yeah. Sorry, I'm just told time check. So
Sure.
just need to be mindful of our time. I know we have a lot of things to talk about, but I just wanted to share a couple of tips and tricks and really best practices, right? That we've seen this time and time again, at least from our clients. How do they tackle these challenges, right? We talk about knowing your customers, right? But what about new customers, right? And I think, David, we had this chat like having that credit customer application form, right?
Yeah, absolutely. So, the first part of the whole credit process is having a really strong contract or credit application in place that, allows you to, identify who you're dealing with, but most importantly, gather all of those pieces of information within your terms and conditions that protects you if anything falls out the back end. So, having a caveat clause in the property that allows you to put security against the property, or asking for personal guarantees, or having a cost clause in there that allows you to on-charge debt collection costs to the customer. All of those things, making sure that you're contracted with the legal entity that you feel like you're dealing with, just means that if you have to go down the point of escalation, you're far more protected and far more likely to get a positive outcome.
Yeah, that's good. And again, right, like you don't have to extend credit to everyone. And if you do, you've got to make sure that this is also based on bureau data. You're running credit scores and reports. You have a very strict system on how to do this. And if you actually, cannot extend that credit, then you need to acquire payment beforehand, right? And having this all digitized is very important, right? Yeah. So this is from the start, like, again, acquiring new customers and that. Now, what about the existing portfolio that you have? Then from what we've seen from our clients is they actually profile their customers, right? We already provide this profiling, but with this profiling, then you can integrate your systematic approach. How would you deal with this naughty customer versus this probably struggling customer, right? Or the ones that you can't contact, right? So different systematic approach on different profiles, and that is very, very key. Yeah. The third point is, again, something that I mentioned earlier, like in ezyCollect, we have that. But Nick, maybe something that you can talk a little bit more about.
Yeah, I mean, it sort of comes off the back of, I guess, what I was sort of mentioning, the pain points. If you have a good process, you can really, one of those pain points, or some of those pain points start to sort of go away. So, have a really robust way of, who it is and who's targeting. Maybe you have a sort of certain portfolios that people look after, so really clear lines of who does what, who chases what, who's customer, so they can build that rapport and have that relationship. Because a lot of the times, a lot of the AR stuff, there is an element of, I know that person, I can ring them and say, hey, we really need this paid. But then the other side of it is you need to have that constant squeaky wheel that they never then fall back behind the list. So, but having a process around that is important. Knowing when to escalate, knowing when to take that move to say, hey, I'm going to, use our friends at Armour just to collect that because I can't let that go anymore. Just not letting it drip. To David's earlier point, like going early. Not if you let something go too long, the rot sets in and it becomes harder and harder to collect. So the earlier you decide to do that, the easier that whole process is, the less the less painful I think it is from both sides. But jumping back to giving people a lot of opportunities to pay, giving them a lot of the times, I know personally, my kids' school fees, it's like, they only collect, I have to bank transfer in. It's such a pain in the neck. I can never find my bank details. There's no BPay. Okay, it's really hard. But if I could set up a direct debit, I'm just happy. I'm happy to take that out of my bank. I'm happy to take that off the credit card, whatever it may be. I'd be a much better payer in that result. So you got to give people no outs. Don't give them any out. Don't make it hard for them to pay. Make it so frictionless that actually the payment just comes out the first time. And so you can do that. That's sort of internal setup, and that's sort of a preemptive way to be able to improve your collections. Don't let them go bad. That's the
And just to add to your point, Nick, I think it's also important, like, try to understand where your customer sits at this stage, right? If perhaps they're struggling to make payments in full, the payment plan is a great way to do it. Like, split it out through 4 payments. At least you can forecast that you're getting something on this one. Yes, it will take time, but if it was already taking time, then and you want to help out your customer, then this is an alternative way that we've seen a lot of our clients adopt already, and then incorporate that into your process, right? Once you see it working, you don't have to wait till it's 90 days overdue to start doing this. Yeah, absolutely. Perfect. And just moving on to the point 4, again, this is all about having that proactive monitoring, right? So there are so many things happening, like what we said, a lot of insolvencies that we're seeing at this point. So make sure that you have those, real-time alerts that you can get for any changes, in the business, so that you can be on top of those customers, right? Maybe a director change or a score change, but also even having that overview of the list of your customers that are risky to your business, right? Because everyone defines risky quite differently, right? Like, someone can say, my customers that are 90 days overdue are risky. But for a small business, maybe it's just 30 days, right? So again, different set of criteria on that one. And just
the other thing, Jane, sorry, just to jump in, the other thing that
no.
When we checked was, and it was just David's point from when we were catching up the other day, it's it's being able to kind of monitor and say, like, here's my good guys. Can I send more sales their ways? These guys are risky. I might just pare it back and kind of be really conservative with what I would do with them. But actually also understanding the other side of your customer profile.
Who are your best customers?
Yeah.
Look, monitoring your database with external information is critical, because if you only rely on your engagement with that particular customer, they may always be paying you on time. So you may be a primary supplier in fuel or industries where they're always going to pay you first, because if they don't pay you, the business stops, and that can often mask issues that are going more broadly in the business. But in that scenario, you're typically one of the bigger suppliers as well. So if that business was to go under, you might only take a 1 or 2 month hit, but it's going to be a sizable hit, and you won't have any visibility unless you're seeing what's happening externally. So it's really important to look at alerts, to look at risk scores, and and have that external view.
Yeah,
that's right. Yeah. And just to extend the last point here is, again, right, like extending your AR process to a third party partner like Armour. This is really important. I think David has already mentioned a couple of points on this one, but and we do have clients who say, no, it's just an extension of our AR process, right? It just comes naturally for them. And David, I know you've been working with our clients on this. So anything else you want to add to that?
Look, it ties in perfectly to point 3. So when you've got a really defined internal collection process, so let's say internally you manage your collection cycle over over 60 days past due, and and using ezyCollect and your people, there's a number of letters and emails and calls and so forth being made over that period. Once you go through that internal process and you're not getting any traction, they're ignoring all your correspondence. It's finding that ideal spot to refer out to an escalation party, because often all it takes is that perception of consequence, which occurs when it gets escalated to debt collection. It's not that you're doing a bad job internally. It's often that they've got cash flow problems and they're paying those that are screaming the loudest. So, I often say to my clients, look at your internal process. Look at which point you become ineffective in terms of chasing debt. So if you're not collecting any debt from day 45 to day 60, you might as well refer that debt out to day 45. So the earlier you get it out, the more chance it has of being collected, the less chance your client has of actually going into administration or becoming insolvent in that particular period as well.
Sure. Thanks for that, David. And just to wrap this up in terms of all those things that we mentioned, I just want to quickly show you this, like what we built in ezyCollect. Just again, our goal here is to give you the tool to make sure you have full visibility of these risky clients. So I'm just going to quickly switch to my other tab. 1 second. Okay. Can everyone still see my screen? I want to make sure I am sharing the right screen.
Yep.
Yeah. So in ezyCollect, we have what we call risk portfolio now, which will allow you to configure again. What does this mean? It's really giving you the tool to define and select criteria that you think is risky for your business, right? So from here, you will be prompted to select certain fields, like maybe balance overdue that is greater than, let's say, 10,000, right? You want to make sure that you are aware of these customers. And let's say we also want to add the risk level, right? Risk level that is anyone who is in the high risk, right? So again, when we talk about risk level in ezyCollect, we combine external and internal data here. And then you can actually see which one of these customers that is, right? Now here you can actually auto refer this to a debt collection partner like ARMA, or you can choose to select and review these customers that you want to send to ARMA. But as you can see here, it quickly shows me I have 18 customers in this criteria. So I'm sure from like a CFO perspective, finance manager perspective, this is really helpful, like to just review, right? These are all my customers that are on that risky level. Look at their balance, look at how overdue they are. What can I do from here, right? If you have a strong internal collections, bam, pick up the phone, contact them or email them. Otherwise, you can do bulk referrals just from here. You can export this, or you can just quickly refer this to ARMA. And then David and his team will do their magic. Yeah. So that is what risk portfolio is. So really just quickly showing that very simple, if you want this, we can just enable it for free. There's no cost to you on this one. What I am just going to go back to our slide just to wrap things up. I know we have 2 minutes. So if you're still here, thank you so much for staying with us. But just a few key takeaways. Let's summarize it and wrap it up. I think we talked about knowing your clients, right? This is really, really important. Having that robust credit application with terms and conditions and constantly monitoring, that is really important. Right. If you're not doing this now, speak to us to see how we can help you on this one. Nick, you're a very strong advocate on the second point here.
Big one. Absolutely. Yeah. About having it, just a great policy. You got to have that and knowing how your processes work, but the use of technology is I think with the challenges like we talked about today around getting staff to pick up the phones, technology is a savior that can, really help that. We're using some AI stuff now, which really just streamlines and makes that process even easier. So that's a super important one.
Yeah. And finally, like what we mentioned, like make sure you extend your accounts receivable process to a debt recovery agency to make sure that you can collect those difficult debts, right? While keeping to ethical standards. And again, we partnered with ARMA for quite some time and they're very experienced on this one. So David, any last few things you want to add here?
Other than to say, obviously, we're governed by ACCC guidelines, which ensures that all of our activity is heavily regulated, and we're all about protecting your brand and our own, and treating your customers with respect.
Yep.
Yep.
Perfect. Okay, so I think we had a few questions earlier that we've answered along the way. If we didn't, let us know. Katrina, I will get back to you on that question. Not sure if it's relevant to this webinar, but you cheeky, I will email you on that one. Otherwise, if there are any other questions here, I see there's some people already wanting to have the risk portfolio enabled. So your customer success manager will definitely reach out to you to get this sorted. That's very easy. Just to wrap things up, we want to make sure that you come up with a new takeaway, a few things here. So we'll send you a recording plus some key takeaways. And also, we are enabling a 45-day trial of Credit Insights. If you don't have this yet in your file, this will just be enabled after this webinar for you. If not, if you're new to ezyCollect, just code MayWebinar and we'll get that sorted for you. Also, risk portfolio is ready for you to use, so just contact us. And from our partner ARMA, so David, do you want to talk about this a little bit more?
Yep. So happy to have a consultation with you around your current processes and how we feel that could be improved potentially. Given that you're an ezyCollect customer, most likely you've already got a really strong internal collection process. So it's really about how that seamless transition of debt from ezyCollect to ARMA happens. And there's no sign-up fees for any ezyCollect customers, and some preferential rates as well, depending on volumes.
Yeah, perfect. Well, thank you all so much for joining us, right? Like, feel free to contact any of us with these email addresses here. And if there are any other questions, pop it in the chat box or just email us, right? Like, again, I'd like to thank my co-host, Nick Cooper.
Thank you. Great time today. Thank you, team.
And our special guest, David from ARMA, and most especially all of you who have joined us today here and are still here. Hope you have a great day ahead and have an easy week ahead.
Thanks, Jane.
Guys. Thanks for having
David.
me.
Thanks, everyone.
Thank you.
Thanks, everyone, for joining.
Thank you, everybody.